For today's Business Matters, we have Don Ma here with us. Don, always good to see you. How's it going?
Doing well. How are you guys?
I'm doing good.
Yeah, all right. So let me start off with Elon Musk today. A bit of a news there. So the world's richest man just got richer, added $34 billion to his bank account in just one day. Elon Musk's net worth surged after an exceptional earnings report from Tesla, and that sent the company's stock soaring. It's the best performance in a decade. It's driven by a U-turn in earnings. The EV maker reported its largest quarterly profit after 4 straight disappointing quarters, and Musk revealed that the Cybertruck has finally achieved profitability, so that's good. It's for the first time in its quarterly sales. And Microsoft shares are also in the green today, meaning more green for its CEO. Filings reveals that Satya Nadella's take home for this year jumped more than 60% to just over $79 million. This was fueled by his stock awards at a time when the tech giant reached $3 trillion in market value. Microsoft has become a frontrunner in the artificial intelligence race with its investments in OpenAI, which is of course the maker of ChatGPT. Meanwhile, luxury handbag makers Coach and Michael Kors have received a blow to their proposed merger. A federal judge has blocked Tapestry's nearly $9 billion acquisition of rival Capri. The FTC had sued because it said the deal would reduce competition and raise prices. The judge has granted a preliminary injunction, which means the FTC can continue its case to fully kill the merger. Tapestry owns Coach, Kate Spade, and Capri owns Michael Kors, Versace, and Jimmy Choo as well. So in response to the ruling, Capri stock tumbled nearly 50%, while Tapestry shares have climbed double digits, about 13%. The two said they plan to appeal the ruling. Meanwhile, 2 federal agencies are looking into the state of competition in air travel. The Justice Department's Antitrust Unit and the Department of Transportation launched a public inquiry, and this comes after last month's merger of Alaska Airlines and Hawaiian Airlines. So earlier this year, the DOJ blocked JetBlue from acquiring Spirit Airlines, and in a statement yesterday, Transportation Secretary Pete Buttigieg said some areas are losing commercial service because of corporate consolidation. He said the goal of this inquiry is to identify and remove barriers to competition. The public will also have until December 23rd to submit comments to investigators on a wide range of issues, and that's including the availability of affordable air travel. Consumer comments can be submitted at regulations.gov. And we're seeing yet another plan to forgive student loans, and this time Biden may erase all outstanding loans for those experiencing hardships. Here's more.
President Biden is proposing another student loan relief plan, this time to nearly 8 million borrowers experiencing hardship. The plan involves erasing the entire outstanding loan balance if a hardship is likely to impair the borrower's ability to fully repay. Hardships include unexpected medical bills, high child care costs, or natural disasters.
The cost of college has just gotten out of control. Young people saddled with heavy student loan debt have to put off important decisions like getting married, having children, buying homes.
Benjamin Webb is a former Obama administration official and served in the Army for 24 years. Webb says college costs have more than doubled over the past 20 years. He says only the wealthy will be able to go if nothing is done.
My own son, who's a major in the National Guard as well as works in government in the intelligence community, he had a significant student loan debt forgiven last year, and he was able to buy a house.
President Biden's forgiveness plans have also been criticized. Some say the policies are unfair.
Think about the college students that did pay off their loans in time and they paid it out. Do they get anything? Of course not. And what about the millions of Americans who chose not to go to college and decided, instead to opt into a career or a job training program or an apprenticeship.
Economist Thomas Savage says the policies punish Americans who don't qualify. He says to truly fix higher education, the federal government should stop pouring hundreds of billions of dollars into schools. As facilities and programs expand, tuition surges, often without producing results.
We're seeing degrees, but we're not seeing the actual educational value increase of those degrees. 31% of students are walking away from college with a loss, a net loss, so they're not getting a return on investment.
The latest proposal includes 2 pathways to relief. In the first pathway, the Secretary of Education can grant automatic relief to anyone who has at least an 80% chance of being in default within the next 2 years. Borrowers wouldn't have to apply. The second pathway is application-based.
And miners can now dig into a clean energy subsidy. The Treasury Department announced that it will allow some mining companies to access a tax credit. The subsidy is aimed at boosting American production of clean energy components, such as solar panels and lithium-ion batteries. The so-called 45X tax credit is part of the Biden administration's Inflation Reduction Act. It offers a 10% production credit for U.S.-made products. The announcement is actually a reversal from the Treasury Department. For example, mining lithium was excluded, but processing lithium into a usable battery would be included. Now, material costs and extraction costs are included if certain conditions are met. A lithium mine in Nevada gets government approval. The Interior Department gave the green light to Ioneer's Rhyolite Ridge lithium mine. It's the first domestic lithium source approved by the Biden administration. The mine will supply Ford and other automakers. It's forecast to power 370,000 EVs a year by 2028. The project faced environmental concerns over a rare flower found at the site. Team's buckwheat flower is found nowhere else on the planet. It was declared an endangered species in 2022. Ioneer has committed to the ecosystem protection. The permit allows the mine to secure a $700 million Department of Energy loan. Conservationists have pledged to challenge the decision in court. Meanwhile, more fast food chains are pulling fresh onions out of their menu items. The vegetable was named as the likely source of the deadly E. coli outbreak at McDonald's. Here's the latest.
US rivals of McDonald's also pulled onions from their menus Thursday after the vegetable was named the likely source of an E. coli outbreak at some McDonald's restaurants. They include Burger King as well as Yum Brands, which operates Taco Bell, Pizza Hut, and KFC. The latter said it removed onions from some restaurants out of an abundance of caution. The E. coli outbreak at McDonald's has killed at least 1 person and sickened nearly 50 others across the US West and Midwest. The U.S. Food and Drug Administration on Thursday confirmed that Taylor Farms was the supplier for the affected McDonald's locations. The company has recalled yellow onions produced in a Colorado facility, according to a recall memo on Wednesday by U.S. Foods. Past E. coli outbreaks like those in 2015 at Chipotle Mexican Grill and in 1993 at Jack in the Box caused sales to drop at big fast food restaurants across the U.S. And Keith Warner, a professor of food science at the University of Guelph, warns there could be more cases.
The incubation period for E. coli 157 is typically 10 days, and the last sort of reported case, I think, was last week. So the problem is that you've got other cases that might be occurring but yet have to be linked to the outbreak. And very typically what happens is that the numbers expand.
Regulators are still investigating whether McDonald's beef patties could be affected, but E. coli is killed in beef when cooked properly, whereas the McDonald's Quarter Pounder is served with raw, slivered onions. McDonald's has moved quickly to try to contain the damage, with its U.S. President Joe Erlinger on Wednesday saying it needs to rebuild trust with the public. On Wednesday, a Colorado man filed what appears to be the first lawsuit against McDonald's over the outbreak, seeking more than $50,000 in damages.
McDonald's stock today is down. It's in the red about 3% here. CDC has updated the E. coli cases to at least 75 in 13 different states. Meanwhile, store closings have hit their highest level in years, and among them, Family Dollar announced 677 store closings this year. Walgreens is closing 259 locations, and Denny's is closing 150 restaurants. Coresight Research says major retailers announced more than 6,100 store closures so far this year, already outpacing last year's total of more than 5,500. Chains are on track to close more stores in 2024 than any year since 2021, when the pandemic decimated the industry. Smaller players are being crushed by competition from bigger companies such as Amazon, Walmart, Costco, and Home Depot, and by offering higher prices than many consumers can afford. Also, years of overexpanding and failed strategies are coming back to bite some chains. Mexico beat China last year for the title of top exporter of goods to the U.S. Now the country is banking on foreign investment as its economic growth slows. Part of Mexico's struggle is dealing with outside forces that affect the business world. This includes an unreliable energy source and political turbulence. Mexico's new president, Claudia Sheinbaum, campaigned on developing infrastructure and supporting nearshoring. That's when companies set up business operations in a nearby country as opposed to one that's farther away. Mexico will also be closely following the results of the U.S. election to see which policies the next administration will put into place. The National Automobile Dealers Association is challenging a decision by Scout Motors to sell cars directly to U.S. consumers. The Scout brand is backed by Germany's Volkswagen Group. NTD Sean Marshall has more on that.
The National Automobile Dealers Association, which represents U.S. auto dealers, says they plan to challenge Volkswagen's Scout Motors' decision to sell directly to consumers, bypassing independent retailers.
So manufacturers are now thinking, well, we'll just sell direct and bypass the dealers. Is that good for customers? Well, I guess it depends on the brand and what they're offering. Buying a car direct from a manufacturer is good unless there's a problem. But hey, Rivian's done it, Tesla has done it, and others have done it with success. So this is something that a lot of brands are looking at. Even Ford has talked about doing this, and Hyundai is now selling cars directly through Amazon. You just do a pickup at their dealer.
The Dealers Association said NADA and state dealer associations fully stand behind VW and Audi dealers that are being left behind by this decision, and are prepared and will challenge this and all attempts to sell direct in courthouses and state houses across the country. The dispute began after Scout Motors announced their new vehicle designed to suit customer wishes and have what Scout calls a future-proof design. The design is a type of hybrid, an EV with a gasoline-fueled range-extended energy system for extra mileage. It targets consumers who are not comfortable with the limited electrical charging infrastructure.
So if you don't know the name Scout, being a former American vehicle brand from 1961 to 1980, they were originally going to plan exclusively electric vehicles, but because people aren't necessarily biting on those, they like that range extender idea.
Automotive expert Lauren Fix says the plan is to help Volkswagen expand its presence in the U.S., and this should be a good start to provide more vehicle choices. Scout on Thursday said it would join electric vehicle manufacturers like Tesla in forging a traditional independent dealer network in favor of directly selling and servicing vehicles. The company is also pledging a full price transparency. Sean Marshall, NTD News.
The European Commission said today that the EU and China have agreed to hold more talks about possible alternatives to tariffs on Chinese EVs, but the agency said significant gaps remain. The EU plans to add tariffs of up to 35.3% on electric vehicles made in China starting next week. And this follows an anti-subsidy investigation. The EU said that talks with China can continue after the tariffs are imposed. Both sides are looking at possible minimum price commitments from Chinese producers or investments in Europe as an alternative to tariffs. Also, investors, some of them at least, are licking their wounds in China after record-high defaults of a type of local government bond. The failed bonds financed local infrastructure projects that don't necessarily generate a profit. Now, usually investors wouldn't fund these types of projects because the bond issuers obviously wouldn't be able to pay the investor back if the project didn't make any money. But investors did buy these because they thought the central government in China would bail them out, but it didn't. For example, Lulu Feng lost her life savings in one of these non-standard local government financing vehicles, or LGFV. She thought she was investing in a safe bond that would pay her 8% returns every year. Instead, her investment was wiped out when the products defaulted last year. She says, "My life is a total mess now," quote, "and I have worked my entire life and put all the money I saved for retirement into the products. I was told these were safe. All that was a lie." Another burdened investor is Jason Lai. His investment turned sour in 2019. He traveled 4 times to the regional city of Anshu seeking repayment, but since then, he's only been returned about 10% of his initial investment. And it's not just these types of non-standard LGFV investments that are failing. China's economic slowdown is putting pressure on all types of bond issuers. Last year, the Chinese regime gave local governments permission to raise around $300 billion in new bonds to repay their outstanding debts. So basically, the local governments are now simply borrowing money to pay back their debt. And in Japan, a record number of ramen restaurants closed down this year amid inflation. It's a top concern for voters as Japan heads toward a general election on Sunday. Here's that report.
As a record number of ramen shops close in Japan, one owner, Taisei Hikage, has been fighting a losing battle. He's striving to keep the prices low while ingredients and fuel costs continue to rise incessantly. But since the restaurant opened a year and a half ago, he's been forced to raise menu prices 3 times. A staple dish in Japan, these inflated prices emphasize the country's broader cost of living crunch, something at the forefront of voters' minds ahead of Sunday's general election. For Hikage, his top-selling dish is up 47% from its original price.
Originally, rice was free for our customers, but we can no longer offer it for free since prices of rice doubled. For cooking ramen soup, prices for pork bones depend on the part you want to use, but the parts we use quite a lot have risen, so we had to increase our ramen prices.
He hopes the victors of Sunday's vote will consider introducing subsidies to support ramen shops, or will reduce utility costs for restaurants to offset these rising costs. And it is a possibility. Prime Minister Shigeru Ishiba, who leads the ruling Liberal Democratic Party, is fanatical about ramen. And opposition parties have pledged various measures to offset costs of the national comfort food. These policies could tip an election which polls show may slip from LDP's grasp. However, while other shops aren't faring as well, Hikage's award-winning ramen still remains in demand.
It has become very difficult to serve cheap and delicious ramen, so we will need to offer ramen that people would want to pay for.
And finally, on to markets. The Nasdaq ended higher today, driven by mega cap shares. The Dow slumped on a loss in banking shares and a fall in McDonald's as the fast food chain copes with an E. coli outbreak. So equities have been unsettled this week by a rapid rise in Treasury yields. And the final stretch before the November 5th U.S. presidential election is crucial for Wall Street. This is when results from mega cap firms, including Alphabet, Apple, and Microsoft, are all due, along with the October jobs report. And all right, that's all the major stories happening today in Business Matters. Back to you guys, Carrie, Fiona.
Don, ramen. I take that very seriously. What do you think?
Yeah, I'm sure you do, because it's a real art form. Some chefs, take many, many years just to perfect the broth, and not mentioning the noodles itself.
Yeah, honestly, ramen is such a comfort food. I mean, it's so nice to just go out on your own or with friends and have some. So I hope they figure things out in Japan, because if that inflation happens here and my ramen prices go up here, there will be rioting.
Well, I think you might have to learn how to cook it at home. It's much cheaper, but I gotta warn you, the process is very, very long. The broth sometimes can take up to 12 hours to make. So
well, hopefully let's hope they figure this out, right? We'll keep an eye on it. So thanks, Don. We'll see you back here on Monday.